Brian Ventura. Pleasure
Trevor
to see you,
Topper.
sir.
Merry
Been a
Christmas.
Yes, it's the festive one. I did actually think to try and get my Christmas Santa hat out as
Yeah.
a prop.
Yeah.
But in typical token affairs tradition, I haven't got that organised. So,
I mean,
Merry
this
Christmas.
doesn't happen by accident, and you don't want to you don't want to ruin it with a Santa hat,
Yeah,
right,
yeah.
Trevor?
You've got to commit to the Santa hat. If you're going to wear it for a podcast or a broadcast, you've got to wear it for the entire duration of the broadcast. Because exactly that. You spend the whole time, sticking your hair back down so you don't.
What a year it's been.
Yes, yeah. This is the last podcast for the year. Yeah, it's been a wild year. Tell me some of your highlights, Brian. What's really stood out for you, mate?
I think the work that you and Jasmine and the Blockchain NZ team have done this year has been monumental. I think New Zealand blockchain has had the most momentum it's ever had in my 8 years in the blockchain industry. And I think the best is yet to come. We've got some alpha that we could share here, but Trevor and I have been busy meeting with some important people, really shaping the future of this industry. We had an amazing conference in Queenstown, Crypto Winter, which Trevor and Jasmine organized. There's heaps. What about you, mate?
Well, look, those are very kind words. I don't want to think that we can, in any way, shape, or form, take credit for the year that it's been. We've been very much on the ride, as much as the rest of the community has. I look back at the year, and it was just, it was the year that crypto reached some kind of inflection point, right? And it was a big year. Tokens went on a run. Bitcoin had an all-time high. So I think there was a lot of momentum in the industry itself, which made our jobs a little easier. But we've had a lot of a big change, I guess, from when I started a year or so ago, and there was very little activity and engagement from any of our regulators or policymakers or any of that sort of stuff, to now we're in active conversations with them. You and I were down there last week, couple of days in the Beehive, and very engaged discourse with policymakers and regulators. So there's definitely a lot of exciting stuff to come in 2026. So there's no rest for the wicked, mate.
That's right. And for those who don't know us, I'm Brian Ventura. I'm a partner at Hamilton Locke. I specialize in fintech and crypto law. I'm also deputy chair of Blockchain NZ. To my left, this handsome man is Trevor Topper. He's CEO and co-founder of Avatars Global, also executive director of Blockchain NZ.
Thanks for joining us on Token Affairs, the podcast that tries its best to talk about blockchain things and have a New Zealand focus on those blockchain things. We do our best to do that. That is our promise to you.
Yeah. And thanks for all your viewership and loyalty this year. We're going to have some amazing guests next year. We've got a great run. I've learned so much. What's your biggest highlight hosting this podcast?
From the podcast, look, I think the podcast we had with Binu, Paul, Binu is one of those guys that flies below the radar, and it was very fortunate for us to kind of get him out of his usual under the radar and pop up on a podcast and share some really interesting insights from his world. So that was a real highlight for me. That was probably the one that I just, hearing all of the things that are going on a global scale in the industry, it's pretty hard not to get excited about. But of course, we've had some big guests as well, which is exciting to have. Jason Titman, CEO of SwiftX, in our part of the world. Feels like everything's coming up SwiftX at the moment, doesn't it? So it's nice to have a good relationship with those guys, and they're huge supporters of all the things that we do at Blockchain New Zealand. So very, very fortunate to have SwiftX a part of it all. There's been heaps, mate. Like, we did our first big event, right? Queenstown, couple of days. We had everybody in the room.
Yeah, sold out.
Yeah, sold out. We have announced next year, I believe, before we get on air again, tickets will probably be on sale. But yes, it's already well underway for Crypto Winter 26. and it's looking to be bigger and better next year. So hopefully everybody comes back and a few other people come with them, and it'll be a good time.
Okay, I don't want to say, I didn't want to say bigger and better. Didn't want to put you on the spot, but that's got me excited.
Yeah, it's definitely going to be bigger and better. So we're excited about where it's going, and we think it's going to be a massive year for policy, regulation, growth in the industry for New Zealand. We think crypto winter next year is going to be a very, very, very exciting one. And despite whatever the markets are doing, New Zealand will be moving quickly by then. So yeah, should be exciting.
Awesome.
And one of the big focuses for 2026, Brian, I think is going to be this growing interest from investors who are looking at both TradFi and now more recently DeFi. Like I had a conversation with a guy recently. I can't say who he was, but we were talking a lot about this, and his sort of opinion was, for every $100 that gets invested, probably 95 of it still goes into traditional finance, right? So there's still a very small amount that's happening in the crypto space, even though we're deeply immersed in it. It feels like it's everything. So this growing conversation between TradFi and DeFi, and some of the TradFi platforms are starting to bolt on their crypto products. I mean, we saw Sharesies drop their crypto thing not that long ago. And then on the other side, seeing DeFi native exchanges and businesses looking at expanding into more traditional finance products as well.
Yeah. Collision of worlds.
The collision of worlds, yes. And money being made everywhere by the sounds of things, if anything that we're hearing is to go by. And our guest today is very deep in that world.
He's very deep. I've had the privilege of being a guest on his podcast, and I reckon you'd be a great guest as well at some point, Trev. Darcy Ungaro, he's got in my view, New Zealand's leading investors podcast for retail investors, and that's looking at traditional assets like property, insurance, but now he's one of the leading financial advisors on digital assets, particularly Bitcoin.
There you go. So couldn't be a more perfect guest to help us have an understanding of what that financial advisor path looks like maybe in 2026, right? So yeah, super excited to have Darcy on the show. So let's bring him on. Darcy, welcome, mate. Good to have you.
Hey, thanks for having me, and thank you for the kind introduction, Brian. Appreciate it. Trevor, once I understand that you're not a crazy guy, I'll invite you on my podcast. You're just under probationary terms at the moment.
It sounds like your podcast is way more serious than someone like me should be on it. It sounds like your audience is probably looking for pearls of wisdom when it comes to investing.
No, you're dropping a few.
Guy doesn't have much to offer.
You're dropping some stuff. Don't worry, I'm picking it up.
The poolside address is maybe not real, right?
Yeah.
I've only just figured that out because there was no Christmas tree there.
Yeah.
Presumably a couple like you looking so good in a place like that would have a Christmas tree somewhere, but no, apparently not.
Yeah. We're a bit late this year.
Okay.
And I think also, Darcy, I'm really excited to hear about your perspective. You're kind of at the heart of where a lot of retail money flows. And you've come from a traditional background of mortgages, insurance, but now you've expanded your expertise, your advisory business to alternative assets. We'd love to really dive into that right now, but I think we want to ask you our favorite question for all our guests. What was your red pill moment? What got you into Bitcoin and crypto?
Sure. So the red pill moment, or almost sounds too pharmaceutical. It's probably more like, it would be probably more, I guess, psychedelic in my case, rather than like a proper pill. And the reason why I say that is because I think it was probably more of a function of having an open mind, and that open mind happened as a result of me doing the podcast. So because I was coming from a traditional finance perspective, everything had to be in a certain subset, had to be in a column of approved products, approved language, approved everything, revenue model, compliance, all that sort of stuff. Nice. And it's kind of, you pick your lane with most things in financial advice, and you stay there, and you learn pretty quickly just to shut up and just stick to what you do well to get paid for, right? I could never do that. I was never designed to do that. And so, yeah, like the psychedelic aspect of this happens in that I kind of mix some stuff up in my mind sometimes in terms of trying to understand what the future is. And so when I was doing the podcast, that's kind of where I started to go pretty early on in the podcast in terms of the guests that I was bringing on. I wanted to understand, where's the future of financial advice? Where's the future of where you would build wealth from? Because if we are really parking today's money aside for future use, we need to be thinking about that future world, not just the present world and what has always worked. We need to be thinking about how that world will change. And so I invited on Sam, I'm pretty sure it's Sam Blackmore. He had a business, My Bitcoin Saver. And I was introduced to Sam, brought him on, kind of had heard about Bitcoin already. Of course, everyone does initially dismiss it, internet, fake money, and then brought him on. Before he came onto the show, I had to actually understand what this thing was. And I, for once, I put away what I thought it should be or what I thought it was, and I started to understand what it actually was. So there was a couple of friends that I reached out to in particular, just to do a little bit more research. And one of them in particular really helped me to understand a little bit more of the technology layer. And then I kind of matched that with my understanding of economics. And then the light bulb kind of went off. So when I had this conversation, I was genuinely trying to learn on the spot. And I think at the end of that podcast, it was like, cool, this is not a scam. This is not fake internet money. This is actually something that maybe I should start allocating just a small amount of my surplus cash flow to, just in case it catches on. And that was my moment.
Nice. I'm sure you weren't
That's
alone
great.
in that thinking process. That's the part of the bit that most people end up at, right? It's like, hang on, this thing is actually way more significant than I probably gave it credit for. And then here we are bouncing up and down around 100K US a coin, which not that long ago was worth peanuts.
Yeah. That's a cool story, right? I think it's good that you had an open mind, because a lot of financial advisors I talk to now are still really closed-minded, because their bread and butter is property and mortgages and traditional stocks.
I think a lot of that is just really where the revenue model comes from, right? Because there's always a few things. There's like, what is the demand? What's the revenue model? How is it regulated? People don't want it, then people don't want it. I don't even know why you're talking about it, right? But what's the revenue model? If there is one, you're going to find advisors providing financial advice on it, funnily enough. And the regulators, well, they actually only regulate things that are financial products, which have a revenue model. And so the whole system is designed not necessarily on purpose by a puppet master or somebody behind a green curtain, but it's just evolved, and it seems like it's set up to kind of be what it is, and it's very difficult to initiate change. So yeah, like I'm the perfect person to kind of be in that environment, because I really detest that sort of environment. So that's why I think I've really enjoyed kind of opening my mind, not so much so that everything falls out, but opening my mind so that I can kind of let new information in and digest it.
So it's interesting that you took that step through a podcast guest, but I think there's a lot of financial advisors out there that are probably already thinking about digital assets. Some of them are probably making moves in that direction. But what does it look like from you talk about compliance, regulation, the things that you need to have in place before it becomes a marketable, I guess, profitable endeavor for the average financial advisor? Like, what does that look like at the moment for them?
So at the moment, it looks like, well, we finally made a start, right? We have this ETF that we can finally start making moves on. And as it, like, just practically, the area that I work in these days is I do a little bit of financial coaching, but I also work in KiwiSaver advice and constructing investment portfolios where it's bespoke. So we can design a KiwiSaver plan now with Bitcoin, with Ethereum, with Solana, even mining companies, Bitcoin treasury companies. It's going to start expanding more and more. So the way it looks now is that we finally have something to sell. And I think for a while there have been a certain subset of financial advisors, and a lot more than you might think, especially here in New Zealand, who have been very quietly understanding where the puck is going, and they have been allocating towards digital assets themselves, yet they've probably been doing it rather sheepishly, kind of almost afraid to talk to their clients about it for fear that it might bring their reputation down, for fear that they might inadvertently be giving their holy grail stamp of approval on this new emerging asset that should be speculative and rat poison squared. There's all that sort of stuff that's been going on, right? But now, since the approval of these ETFs, it's been quite interesting just to see that, yep, the tides come out. No one's swimming naked. They've all got orange ties on and orange socks on, right? Like they're actually proper Bitcoiners within our space. And now that it's safe to do so, they're coming out. And it's quite cool. So to see that there is like this group of financial advisors that are pro Bitcoin specifically, but also they understand the ecosystem. Some of them are probably more in the crypto space. Others are probably more in the Bitcoin space. But because there are products to sell, there's a revenue model attached to it. It's nicely wrapped in traditional finance. There's oversight, ticks the boxes with the powers that be. Effectively, there's no more reasons for the regulator to say no. And that's really quite cool. It feels kind of like that's just the beginning, though. It really does feel like there's a lot more to come. A lot more advisors, yes, but also a lot more products to come. And I'm excited to kind of see what that looks like. I'm not quite convinced that it's going to be just this. Whereas I think most of traditional finance probably thinks, okay, we're going to reluctantly invite that weird one to the party, but we're not necessarily going to allow them to move in. We'll see what happens from here, though.
Yeah, I mean, that kind of that resonates a lot with me, and I think with Trevor as well. I suspect, we were having really important, positive conversations with politicians last week, and we made it really clear that Kiwis have this insatiable demand for digital assets, and they're going to buy it from a local provider like Easy Crypto or from overseas, whether you like it or not. Is that kind of is that kind of what you're seeing as well?
Totally. Yeah. And in fact, like over the last 8 years or so, since I've been kind of, in the podcast, I was talking about it in the podcast 8 years ago, but also with my clients, my own financial advice clients, I was talking about it, even though I didn't have a revenue model, even though it wasn't regulated, I spoke about it as just a form of money that you might want to put some of your savings in. And I was specifically always just talking about Bitcoin. So it wasn't a financial product at all. But I think as time goes on, you kind of get a little bit of an evolution that goes on. And sometimes this happens, by the way. I just realized I totally forgot your question, Brian, but it was really good one.
Kiwis have insatiable demand for digital assets.
Yeah, thank you. So despite the fact that financial advisors weren't talking about it, people were still allocating. So everyday people were still allocating. They were figuring out how to download a wallet. They were just going onto YouTube. They were basically getting financial advice, which wasn't financial advice, of course, from the internet to do it. And it was amazing. Like, so I've seen that people don't really necessarily need to wait for TradFi to give their stamp of approval, which is good. They should be thinking for themselves. Now the onus is on traditional finance to actually get their act together and understand a lot more about it so that they can provide structured ways and more, I guess, strategic pathways for people to allocate thoughtfully towards this.
So I'm interested in like Blockchain New Zealand plans to run some events next year looking at educating financial advisors about how they can, upskill and move in the digital asset space. We know that there's other assets already happening in New Zealand, like tokenized real estate and some of the other things. I wonder if there's something we can learn, Darcy, from your kind of, out there with the machete cutting your way through it, or like having these early conversations. Maybe your clients were probably some of the first Kiwis to have their financial advisor talk to them about digital assets, right? So
Totally.
I'd love to understand what those early conversations look like and how that might help us shape kind of some of that education content for next year.
That's a great question. Yeah, because a lot of it, like from your perspective, of course, from, if you come in it with blockchain NZ on the banner, of course, they're going to expect it, right? But when you go to your doctor and they're prescribing weed, slightly different vibe, right? And that's kind of exactly how it felt, is that people were coming to me for mainstream traditional financial advice. And then I was talking about this homeopathic sort of here in the form of Bitcoin.
Gateway drug.
No, it completely lose credibility, right? So that's exactly what it was like. It was like, you've lost me. That guy spoke about Bitcoin. Forget it. There's no way. I had comments on the podcast early days. Hearing it secondhand, of course, people that would never listen to me ever again because he didn't dismiss Bitcoin. It's almost as bad as not dismissing Trump. You didn't put it down right away, therefore we can't trust you. Or if you bring it up in an actual formal financial advice session and you mention alternative assets like Bitcoin, yeah, you lose credibility. That's changed now. I don't get the phone calls from people saying you were a freaking genius. We should have bought it when it was $3,000. No one ever thanks you. They would do the opposite, but they're not going to thank you for that. Especially when you say it's not financial advice, so you can't take credit for it. But I think it is a very different vibe now. But back then, it was very much reputational risk. And you really have to believe, back then, you really had to believe in it. And I kind of get the sense that with where we're at in the adoption cycle of crypto generally, we're probably at that stage now where we're not the fringe minority, where there's enough of a majority and there's enough of a stamp of approval where you can kind of go, well, this is happening whether you like it or not, whether you understand it or not. We are just out there innovating within certain guardrails so that we can usher in the future of finance. So I think it's going to be a lot easier, but if you are addressing traditional financial advisors, yeah, you're going to get a range of responses that will be straight out of the book in terms of it's internet fake money. Everybody can make it. Only criminals use it. It's bad for the environment. That's what you're going to get. But you're also going to get really well kind of educated, thoughtful people thinking critically about it and understanding the risks and understanding what the opportunity is as well. So yeah, it's quite a diverse time to be having those conversations if that's what you plan on doing. It's quite cool.
I mean, you've launched your new advisory business, Radical Investments. Kind of tell us how the journey of your conversations have evolved now that you've got your new advisory business, Radical Investments. Like, what are the conversations like now on digital assets?
Cool. Okay, and I should probably say really quickly, I didn't start this business. Joel Robinson started this business a few years ago, and I recently bought into it this year. So the backstory is that back in 2003, I became a financial advisor, and I built up a mortgage advice business, an insurance advice business, a KiwiSaver business. I sold it late last year, so only a year ago. Spent the first part of this year trying to figure out how I could get closer across the bridge from Web 2 to Web 3, if you like, or from TradFi to DeFi, from the already to the not yet. And it was really, really challenging. Just purely getting into the investment advice space, very, very challenging. Even though I was already a financial advisor, the systems, the processes, the compliance stuff, like there has to be a lot of work that goes in from the bottom up to actually build a business like that. That's why I have so much respect for Joel in the way that he's built a very, very compliant business, which is also very open-minded and accommodating towards the future of money. And so when I was introduced to him midway through this year, or when I introduced myself to him, I basically said straight up, look, I don't want to do anything else apart from figure out how to buy some of your business. I'm going to be really blunt. What you're doing is exactly what I want to do. I don't want to reinvent the wheel. I want this. And so, I think he was a little bit taken aback initially, but eventually he kind of warmed up to me and kind of go, okay, let's understand where this wacko was coming from. And eventually we put pen to paper, and that transaction happened at the start of October. And now it kind of feels like, wow, this is actually already happening. Now I can finally put my business into alignment with my core message and core thesis around the future in a very compliant and safe way, and with guardrails to completely be myself. And it's incredibly freeing to be able to do that. Like, to be honest, for the first time, and since I started the podcast, when I first took that psychedelic pill, to realize there was this other world out here, this other dimension, I can now walk into it. And it's just unbelievable. Like the feeling of being free to be passionate and remunerated about the same thing that you're going to talk about anyway. It's pretty cool. So yeah, that's where I'm at right now. And yeah, there's three things I do. I do financial coaching, which just means it's not financial advice, but it might help you to become a better investor. So for self-directed DIY investors, it's a sounding board where people can reflect off me, and off we go. And then there's the KiwiSaver advice, where we work with a provider that allows us to build bespoke KiwiSaver portfolios and invest almost in like whatever you want. And then same thing with investment portfolios. I've come out of a property space for like a long time, so it's slipped in there every now and then. So yeah, that's kind of what I do right now. And it's, yeah, according to the video here, it's actually Lackadar.
Lackadar.
Right? Yeah.
Yeah. The superannuation or KiwiSaver thing's interesting to me. You know, it feels like there's definitely shifting sands there. I mean, this year we saw it go compulsory, like that was the big kind of thing that happened in KiwiSaver. But I'd love to get your sense around what's happening where KiwiSaver meets digital assets, right? Like, what does that landscape look like for the average Kiwi out there today, and where do you see it going?
Cool. No, that's a good question. So at the moment, and this is my interpretation of it, so forgive me, anyone listening who probably has a better technical version of this, but my kind of way that I imagine it is that traditional finance is wrapping itself around digital finance or digital assets. And I see that as maybe part of the evolution. Maybe that's a step towards the ultimate, but the ultimate, I believe, is the other way around, where we're going to have the digital that wraps itself around the analog, or DeFi wraps itself around TradFi. And I know it might sound just like a play on words or just a mental gymnastics, but the rails, right? Like we're talking about rails that are fit for a digital world. Yet most of our wealth sits on analog rails that were designed well over a century ago. And it's not designed to carry the payload that we're putting on it. It's like we're running stuff over copper wires still. And we're in a digital age. And so, and that kind of thinking should flow through to everybody's individual portfolios. Like if you're investing in equities and bonds and even investment properties, but you have to go through fiat currency on traditional analog rails with traditional financial institutions all gatekeeping it and doing handshakes with each other. Well, that's not going to work. That's not going to work when everything else is digital. So if there's a digital transformation of all value, to quote somebody else's podcast, Cody Ellingham, if that digital transformation is occurring, and it definitely is, then there's a massive risk by just assuming that you have to own that digital space within that traditional wrapper, because at some stage it's going to break. And I don't know what that looks like, but it ain't going to be good. So even though I'm really excited about what's happening, and financial advisors finally have products to sell where there's digital asset exposure within it, I think ultimately we do need to get to a place where the denominator itself has changed. And that's going to take not just evolution, that's going to take a phase transition. And I on one side, I'm quite excited about that. On the other side, I'm quite concerned about that, because I can see a lot of disruption ahead, to be really blunt.
Yeah, I mean, that's the world that I love. I'm addicted to that stuff because of the constant problem solving and opportunity that comes from those problem solving. So, you know, my way of describing that is the entire global financial system is being rebuilt on blockchain rails, right? Like that's currently what's happening on the planet. And through all of that, there's going to be an enormous amount of disruption and new things that are going to come that we're going to have to get used to, new ways of managing our money and managing our finances and investing and all the rest of it that's going to happen. And what I get excited about is crypto is use case number one. Like cryptocurrency is the first use case of blockchain technology. Like, and the result of that is, like you say, it's pretty quickly becomes identified that this is an old broken system that doesn't work anymore, and we need to put it on a new system. And then when you start to roll that down along the value chain, you start thinking about, okay, what about my data? What about my identity? What about, you know, automation and robotics and all that sort of stuff that's coming down? How is that all going to be kind of managed and regulated and authenticated, and how does that all work? And it's all, you know, blockchain plays a role along that whole value chain. So I think it's a pretty interesting perspective that you got, because you're really talking about the infrastructure, right? That's what you're kind of
infrastructure.
infrastructure kind of shifting right now.
That's right. I think that there's like anything new, there's the promise of the new, the goodness of the new, but then there's also sadly the destruction or the risks of the old. And I can't remember his first name. No, I can. I think it was Joseph Schumpeter. He's an Austrian economist, and he coined this phrase, creative destruction. And
I was about to say that.
Look at that.
Yeah.
Great mind,
destruction.
Yeah. And that really, this feels like just like the most phenomenal creative destruction of event that you could ever imagine is occurring with all forms of wealth and value and the way it moves around within the globe. And I think that there is, like, even just with digital ID, for example, there's equal measures of terror and delight, right? There's equal amounts of risk and opportunity. How to know which side of each issue you should be on, whether you should be ushering it in or building safeguards against. These are really nuanced questions that I think you can't just answer it from an enthusiast's point of view or someone who's an early adopter. You have to kind of genuinely be playing both sides of everything, I think, because I think that even a lot of the people that understand blockchain and they understand like the promise of what digital currencies can bring, they're also simultaneously, whether it's on purpose or whether it just is what it is, you're also working for an enemy, and you don't know who that enemy is. But that enemy could at some stage steal your wealth as well. It depends, because this is very powerful technology that we're working with, that we're innovating in, and it will fall in the hands of other people in the future, nefarious actors, that we might become a victim in something that we actually had a hand in creating. And I think that takes a certain amount of honesty to actually go, well, yep, we are involved in something pretty special here, but we're also going to judge ourselves in the future, I think, with which part we championed. You know what I mean?
Yeah.
It's a funny one.
Yeah. AI, I feel very similarly about AI. So Avatars Global works mostly in AI. We do intersect blockchain a bit, but not a lot. Mostly it's sort of fine tuning AI and applying it to different use cases and stuff. And you feel the same thing. Like everything you look at, you go, suddenly I'm in this 50-50 decision making process in almost everything. It's like, is this a good thing in the grand scheme of things? And it's a bloody weird thing to have to think about, right?
It is.
Yeah. It's not something when I was running businesses 20 years ago that I ever had to consider. It was like, that's where the end game is, like, run at that, right? Be best at that race. And now it's like, well, maybe it's this and it's that. And everything feels like it could change in an instant. That's the other the shifting sands of running businesses and growing businesses, and this whole blockchain and cryptocurrency space is built on this. These shifting sands of what's possible and what's what people are able to do quickly. It's a wild time.
I think we share kind of really similar belief systems or theses about digital assets and blockchain. And for me, kind of to add on to both of your points, like fintech and blockchain and AI, social media, it's all about kind of the battle for the customer relationship. And as the population gets older, really we're building new infrastructure for the younger generation. And from anecdotally, including from my experience, I got into crypto because I was kind of locked out of traditional assets, and a lot of younger people have been locked out of traditional assets. And now all of a sudden, digital assets has become a bigger piece of the pie. And now TradFi is trying to capture some of that attention and money. From your perspective, Darcy, like from a generational perspective, like where do you see the tensions and opportunities, like from older generation, new generation, in the digital asset space?
That's a good question. I think that, the holders of these new assets will be maturing in their understanding of what the opportunity is at the same time that the assets themselves and the opportunities themselves are maturing. And I think we probably loosely touched on it. I can't remember if we hit record or not before at the start around this. We're kind of, where the real opportunity is in the blockchain space is probably not in the digital tokens that a lot of people will try to hold. Yeah, maybe that was the first iteration of it, but it's probably more in the infrastructure play. And I think that's important, especially when you think about the generational piece, because as the, I guess, the beneficiaries of this new type of technology age, their needs will age as well. Their needs will change, and they'll need more sophisticated financial products, or they'll need financial services that operate exclusively on these new rails. And I kind of think that that's where we need to get to, and it's probably an interesting sort of place to kind of differentiate, the Bitcoin space from the crypto space, because I think with Bitcoin, for me, in my mind anyway, like Bitcoin is the only digital token that you would want to hold long term. Whereas in the crypto space, really, it's more the businesses and the infrastructure plays within that space that you would really want to own. And so one, you would own the token, one, you would own the business that's running the token, if that makes sense.
Makes sense.
And I think that that's kind of where the opportunity is for those that are building, is to kind of think, well, which chain can we build on most efficiently to provide the types of products and services that our older clients will want, or our current clients will want in the future. So life insurance, lending products, ways that you can assist with intergenerational wealth transfer. That's why I'm quite interested with the tokenization of property. I think that's quite interesting. That kind of stuff, I think, is where the building should be happening, and let the best win, right? Whatever the chain is that is most able to build the products and services for the future will win. And that's cool. It's the Wild West, but it's the free market while it exists. It won't exist for long, but that's the free market. That's the opportunity as well for those building. I don't know if that answers your question, Brian, but I'm just babbling on now.
Yeah, that was great.
I think a lot about, what we consider an underpinning like asset or source of value, right? So Bitcoin's about scarcity and limited supply, and supply and demand factors that are playing a role in that. And, once upon a time, we cared about the price of gold, and most currency was pegged against this kind of underlying asset. I feel like we don't live in that world right now. Like from a traditional finance point of view, there's, I describe it as the ultimate trust me, bro. Like, we just all agree on this and everyone will get along fine, right? That's kind of where I feel like it is.
That's good.
And so I think about that, when we look at what is driving the growth of different chains in the blockchain sense, it's the value that's being developed around the token. It's not the token itself. Again, to your point, Darcy, with the exception of Bitcoin and maybe some other newer tokens that work like Bitcoin. And I use stablecoins in that sense, not that it's like Bitcoin in terms of limited supply and contracts and coding and the rest of it. It's in terms of the function that it plays.
Yeah, utility.
Strong use case there. But yeah, so I try to look at the new way in which we value something is around the effort and energy and things that are being poured into that, and that drives the value of that in the free market versus marketing and all of the other stuff that seems to drive the value of money at the moment.
And it's a new technology, right? So how else is it going to come into existence? It's going to go through an awkward teenage phase, and it's going to be a bit goofy and a bit weird and a bit insecure sometimes. But eventually it'll mature and it'll come right. But yeah, you're right. I totally agree. Like I think there's always going to be one dominant player that gets that critical tipping point of adoption, and in terms of a store of value narrative, that's absolutely Bitcoin. And so when I'm talking to my clients, even the clients who don't specifically request it, I will advise that, we should be allocating 3% towards Bitcoin. 3% is a really good number in terms of creating the potential for an outsized return, but also limiting your downside. So it's right at that sweet spot. Obviously, we can facilitate much larger allocation than that, but 3% is what we would have across all of our model portfolios. As it relates to the other tokens, Ethereum, Solana specifically, that we can actually get access to at the moment, I'm sure there's going to be more. I don't recommend those because as a long-term hold, it doesn't really make sense. As an infrastructure play, which you can't really access just by, well, you can sort of, I guess, if you get into staking, right? But if you think about the businesses that can be built on these chains, that's where the investment is. But it's like, how do you get to that? And I think that's where you need to kind of think more broadly and kind of go off the traditional rails again. And now you're into private equity opportunities, right?
Yeah. Those are great insights. I mean, would love to deep dive into, which chain should we invest in? Because definitely, Trevor was talking about it, like Ethereum, Solana, a lot of these layer ones, they have a trust layer for the internet. We don't know what's true anymore, right? In this AI world. And so, like, especially with digital identity, you need a trust layer like blockchain to run that. But I mean, I just wanted to circle back to Bitcoin, and you were talking about Bitcoin being probably your biggest allocation. That's what you recommend. What's your thesis on Bitcoin?
Oh, great. We could talk. How long have you got, Brian? Joking to death.
We've got all afternoon.
Yeah. So the best way to say it is to sort of talk about it in the form of the inevitability of the decay of the current system. And so I would take the view that traditional finance, and by traditional finance, I just mean from people to consumers, to institutions, banks, insurance companies, investment firms, central banks, local banks, just the whole network of interconnected organizations that move this fiat currency around, this currency which is created out of nothing by governments without any degree of accountability, it seems. Money that can be created out of nothing by decree. And my view is that that's a finite lifespan. And the evidence that I would put forth to actually back up that claim is the fact that if interest rates consistently will trend to zero with lower highs and lower lows with each interest rate cycle, then that's evidence that if the cost of money is going to zero, then that's becoming less and less valuable. And so the trade is to acquire things that are the inverse of that, things that are scarce, that can't be created out of nothing. And in the digital ecosystem, you have to use something in the blockchain world because that's digital, but it's possible that could be finite. And so hence Bitcoin. And so for me, it's the inevitability that the fiat currency that we currently use today, that we denominate everything in, it's inevitable that goes to zero. And so there'll be a competition, sure, to be that other asset that we move into, but there will be another asset that we will all want to move into, not be forced to do. And we'll all get there in our own time. But the pace at which governments and central banks are discrediting themselves and the pace at which they are earning their lack of trust seems to be on an exponential curve. The rate at which people are realizing what's going on, it's not linear either. Some people get it sooner than others, but I think it is catching on. I really think especially in this year, I've been blown away by how fast people are starting to realize, holy crap, this system is absolutely rigged. Where do we go? Do we go back to gold and silver? Well, maybe.
And gold and silver have had all-time highs, right? Like they're pumping.
Yeah.
Because I'm sure a lot of people are making that decision and saying, fuck it, I'm going to do that.
Yeah.
That's right.
Totally. So like that is absolutely a function of it. But then there's also, and it's a maturity thing. Like Bitcoin is not necessarily seen as a mature asset yet. It's not seen as a safe haven asset yet. I've taken that view probably about 4 or 5 years ago where, yeah, this is actually a safe haven asset because I'm not investing for an analog world. I'm investing for a digital world. Therefore, how could I put wealth into an ecosystem which I can trust? Kind of like what you were saying before, Brian, I think in terms of like, how do we kind of have that authenticity, that trust layer? And it's the same thing, like with our wealth. Where do we really trust that wealth to sit? Do we want to put that in a custodian who's like 5 times removed from us in another jurisdiction with all sorts of regulatory risk and just
including fraud and error?
What's that, sorry?
Including fraud and human error risk.
Exactly, yeah. Because ultimately we got to trust some hands, right? Like there's the asset and there's the hands that hold it. Can you trust your own? Or can you, like right now, most people will trust somebody else's hands, but I think there's a day that's going to shift where nobody will trust anybody anymore. and they'll want to self-custody everything they possibly can. And so that is my thesis. And that's kind of why I think that, and there's elements around the edges of this, of course, but that's kind of why I think that it is a responsible thing to do as any financial advisor. It will be a responsible, ethical, right, fiduciary thing to do, to advise clients to put a portion of their wealth that they can lock up for at least 20 years, in my view, into Bitcoin specifically, and then just forget about it. If they can't do it themselves in their own self-custodied wallet, then ETFs, KiwiSaver, and their investment portfolio, multi-sig wallet, perhaps. There's different ways of doing it, but that's the ultimate idea, is to get some of that wealth off of the current present day table and into tomorrow's table, so that you don't have to worry that you never took chips off the table when you had the opportunity.
Forget about it, but don't forget about it too well.
There you go. Forget about it. Yeah.
Don't want to lose your keys.
Yeah.
That's great. I agree.
Yes, couldn't agree more. So I think, I try and tell everybody when I'm, people often ask me about, what crypto should I buy and all that sort of stuff. Like, I have an Oracle, and I just say, put some money in Bitcoin and take it off the chain.
Yeah.
If you can do that, then you've got something, right? You can put your hands on, and that's the digital equivalent of sticking some cash under the mattress, which we're probably, maybe not Brian, but we're definitely old enough to remember as a kid having all sorts of stuff stashed under the mattress and no one would ever find it,
Yeah.
That's funny.
Yeah.
Look, Darcy, I really love this conversation. I love your outlook. I really agree that eventually everything ends up on crypto rails, because the rails are smarter, and TradFi will adapt to that, and that's already kind of happening. I think it'll happen pretty quickly. And I'm really interested to see how it plays out for the commercial layer of, the productivity layer of New Zealand, like how companies can take advantage of this, and we can help grow the New Zealand economy. But more than that, how we can get some of that shifting money into the hands of everyday Kiwis. This restructuring of the global financial system is going to happen once, and then it's done. Once the table's kind of reset, it's reset. Whatever that looks like, and that stuff circling around now, and the opportunity, I think, is probably closing, right? Like, slowly but steadily, that's all coming to land somewhere. And I really love the idea that we can try and get people like yourself out into the communities and talking to people about the opportunity, and being sensible and credible and regulated about it all, and making sure that people understand what the options are and what it really means, and
that's right.
All that. Yeah. So that's my final thought. Looking forward to doing more of this next year. Brian, any final thoughts before we wrap up?
I'm just, you kind of caught me off guard, but I definitely just really grateful for the year. Had such a successful year for Blockchain NZ. And this podcast has been a big success. It's going to go from strength to strength next year. We'd love to have Darcy back on and really dive into, should we invest in Ethereum or Solana, or is it chain number X? But definitely, I think as Jason Titman said, we're at an inflection point, and it does sound like you can either take advantage of it and be a big winner out of it, or be left behind. What about you, Darcy?
Oh, I get an opportunity to share some deep thoughts. Wow. I'm just looking at that pool in the background.
And there's no clock running, mate. You don't feel like you've got a set amount of time to wrap the show up. The show is the show.
Yeah. That's cool. Yeah, I think like 2025 has been a really fascinating year, just from where I've sat, because I've personally kind of gone through significant change professionally, but kind of doing that in an environment where you can kind of see, you're right, like Jason coined it pretty well, at that inflection point where you can't go back anymore. In my view, we are committed to this course event. And by say we are committed, it's at the institutional level, the government level, and in the individual level, things have now progressed to a point where you actually now literally have no excuses to not be allocated in some way to digital assets. And I kind of think of it like, well, 20 years time, let's say you're 45 years old for argument's sake. In 20 years time, you're going to reach retirement, and you're probably going to have kids that are on the verge of moving out and maybe considering buying their first home, perhaps. And that's usually when kids will look at their parents and go, well, how did they do it? And they'll remember everything from their childhood, from which house they lived in and whether they owned a home and what mom and dad did for work and what kind of financial decisions they make. They will judge you. Guarantee it. They already do judge you if you have kids, but they will judge you even more at that point in particular. And you'll judge yourself as well, I think. And I know it's very nuanced, and it's not about being right, but it is about giving it a good go and being responsible with the information that's been given to you. But if you make a really good decision with your assets today, you won't have regret at that time in the future. And this inflection point, I think, is a really cool opportunity. Like to me, it kind of feels like 2026 might be a year where we get a crypto winter within a crypto winter, if you know what I mean. Like if you guys are doing the crypto winter event again this year, it might be another crypto winter. Who knows?
It might be a good thing or a bad thing for the event too, right? Like
who knows? That's true.
People might come and support the crypto winter. We call it early, or they might be clear of it because they're suffering badly.
Drown in sorrows.
Yeah, that's true. But like I'll be optimistic if I'm there. Like I will be like genuinely optimistic, because at the start of this year, I was thinking I wasn't able to allocate enough into this space, and I've missed out. It's now everyone's figured it out. Maybe not quite everybody, but it's taken off now with the approval of ETFs, with the election of President Trump in the States. Okay, it's all going to change from here on in, and the horse is bolted. But I think we have probably, hopefully, another year where we can accumulate. For me specifically, it'll be Bitcoin, but also I think if you're building in a bear market, right? Like this is when we get stuff done. And so the other part of how I approach this space is just thinking about the businesses that are innovating and what are they doing and where is that puck going, and what is the best play here. So I kind of feel like next year could be a really good year for allocating. And I didn't think that before, but now I'm starting increasingly to think about that. So I'm kind of looking to the year ahead with a lot of optimism.
Awesome. Okay, guys. Well, on that bombshell, let's wrap it up. This is it. This is a close to 2025. Thank you for being our final guest for the year, mate.
Thank you. Thanks for having me.
Amazing guest.
Thank you.
You're our kind of people. So, Brian, Merry Christmas to you and your family, mate. And Merry Christmas, Darcy, to you and yours as well.
And likewise,
mate.
Hope we get to touch some grass for a little while and decompress before 2026 comes at us full tilt.
Yeah, it's cool.
Yeah.
All right. Thanks, guys. See you.
Thank you. Thanks for having me. Cheers.
Stay safe.